All right, welcome. Today is September 13th, 2024, and today's video is going to be a trade breakdown over my trade on Monday and why I took the trade, some of the reasons why I took it, and just the trade breakdown. And let's get right into it. Alright, so Monday, September 9th, 2024, during the New York AM session. And let's go back to where prices was on Monday. So Monday, I was anticipating for prices so my weekly objective here coming into Monday was I was anticipating for prices to take out this weekly low here. However, the way we closed on Friday, we created a daily fair value gap, and so Monday I wanted to see prices trade into that daily fair value gap and take out Friday's high of day. So we actually took out Friday's high of day. Where were we? Sorry about that. Give me a second. Wait, hold on. Did we even take out? No. We closed. Oh no, sorry. Okay, so yeah, the daily objective for Monday was to take out Friday's low of day. I'm sorry. But however, for us to take out previous day low, we were going to have to respect this 4-hour fair value gap. However, we didn't respect this 4-hour fair value gap and continued lower. So we, like I said, we didn't respect it, right? So we just continued to climb higher here. So that to me was already okay. Well, we don't seem as bearish as we should be. And on the 15-minute time frame, let's take a look at what happened here. So during the Asian session in London session, we priced higher, and then we began to, we didn't show any respect to that 4-hour fair value gap. So this led me to believe that we were going to continue higher. During the New York AM session, we took out pre-market highs. After we took out pre-market highs, we began to displace lower. This move lower here, I wasn't able to get. There was simply no trade model for me to take here. The trade I told myself that okay, I'm going to start being really selective on my trades. So I really have to incorporate time frame alignment. Why did we create that power of 3? Can we apply breakaway gap theory? So on and so forth. So this entire move down here for us to take out London lows and quite possibly Asian lows as well, Asia's lows, we never got that model for us to be a part of that move. So I continued to wait, and then whenever we got this retracement here on NQ, I told myself, okay, I'm gonna wait for the retracement play here. So for us to continue lower here and attack Asia's lows, we were going to have to respect this 15-minute fair value gap. However, whenever prices trades into this 15-minute fair value gap, we showed no willingness to continue lower, and we got candle closures above bearish fair value gaps. This is indicating strength in the market. And like I said, this move up higher here, I wasn't presented with a trade model as well, so I had to sit out during the entirety of the New York AM session. And the trade here I took today or on Monday was actually based off of how we closed here on the 15-minute and the 30-minute. So first off is notice how prices closed below a 30-minute fair value gap, 2 30-minute fair value gaps actually, on the 30-minute time frame. So we're disrespecting bullish PD arrays. Based on how this 15-minute candle closed, what can we anticipate? We can anticipate lower prices on NQ, right? So this 15-minute time frame is in alignment with the 30-minute time frame. The 30-minute time frame is telling us that we're going to continue lower and that we're disrespecting bullish PD arrays. So now that I have a clear, direction of where prices wants to go, now is when I start looking for, okay, what can my possible targets are. So I drew up premium and discount of the swing low and the swing high, and you always want to be a buyer in discount, right? And you always want to be a seller in premium. So for me, one of my targets here were actually the equilibrium of this price range, or the discount portion. One key tip that I would recommend that you guys take down is always ask yourself, or what is prices doing at this current moment? One, are we seeking liquidity? Are we seeking buy side liquidity or sell side liquidity? Second objective for prices to move is, are we rebalancing fair value gaps? So prices, you can see how prices are trying to rebalance this 30-minute fair value gap here. And the third thing is prices retracing into premium or discount? This is an objective. Prices is trying to rebalance or retrace into the discount of the price range and rebalance the 30-minute fair value gap. And the fourth reason why prices moves is to generate liquidity. So seek liquidity, generate liquidity, rebalance fair value gaps, and retrace into equilibrium. So my target, based on that objective there, my target here for this trade was the equilibrium of this price range. So now you're wondering, okay, now that I have all of those in mind, how am I going to enter this trade? Well, I would go onto the sub 5-minute time frame. So I would go on the 5-minute, the 4-minute, the 3-minute, the 2-minute, or the 1-minute to find some sort of entry PD array to take my trade off of. One thing I forgot to mention was pay attention to this 15-minute fair value gap here. This 15-minute fair value gap should be treated as a breakaway gap. You want to see prices open up on this very next candle, trade into a lower time frame fair value gap, and then continue lower. You don't want to see prices open, retrace all the way back into this 15-minute fair value gap, because that doesn't indicate bearishness. We should take out this 15-minute low first, and then we can rebalance this fair value gap. You don't want to see prices rebalance the fair value gap first in this case, because notice how prices closed below the previous 15-minute candle's low. So this indicates there's strength in the markets. And so that fair value gap, this specific one right here, could be treated as a breakaway gap, a 15-minute breakaway gap. 15-minute breakaway gap. So the entry pattern. On the 2-minute time frame here, we have created a 2-minute fair value gap. And like I said before, I'm targeting the 30-minute / 15-minute low. So you want to be finding some sort of PD array that helps prices continue lower. So prices opens up at 14 at 2 right here, and we wick up into that 2-minute fair value gap. And look at how prices takes out the 15-minute low and the 1-minute low here. I'm sorry, 15-minute low and 30-minute low, and hourly low as well. So there's actually 3 time frames that prices are in alignment with: the 15-minute, the 30-minute, and the hourly time frame. All 3 time frames here are suggesting lower prices. So in this case, like I said before, I'm targeting the 15-minute, the 30-minute, and the hourly low. I can use standard deviation projections as targets, and like I said before, I am using the equilibrium of the price range as a target as well. A+ setup, like I said, time frame alignment, breakaway gap theory, lower time frame PD array to enter off of. This is a A+ setup. And yeah, that's just that's probably gonna wrap it up for my video. I know I haven't been releasing a lot of videos this past week. Simply being is this past week, for me at least, the way I trade, I have not been presented with many models. Either we had such a massive expansion because of CPI and I wasn't even able to get a part of this move here, or we just consolidated, and that consolidation is something that I do not want to be a part of. And yeah, that's gonna wrap it up for today's video. Thank you guys so much for watching, and until next time, peace out.